This video is being recorded on Wednesday, July 12th, 2023. Thank you so much for tuning in today. And I'm traveling, as you know, I'm away, but I wanted to get a video or two out, and I have a chance to do that right now. So in this video, I'm going to talk about a short-term bullish signal in the gold stocks. This is a video that I've been preparing in the last day or two, and after today's action, it seems more obvious. But I want to get into this important signal, and that is the advanced decline line. And so, and I mentioned this in my brief weekend subscriber update, that the advanced decline line, even coming into the week, before this rise in the last couple of days, there was a positive divergence here. And so this is the third time we've had one in the last year or so. And the last two times we had positive divergences in the advanced decline line, we can see here, this is a positive divergence that marked this low. It took a little while for the miners to get going, but that signal proved to be a bullish signal. And the same can be said, at the end of winter here, end of February, early March, bit of a double bottom, slight higher low in the advanced decline line, lower low in GDX. And again, we've seen the same thing in recent weeks where GDX just made a slight lower low, but look, a higher low and a pretty strong one in the advanced decline line. And of course, after today, or even before today, the advanced decline line was really close to making, I want to say, 6-week high or so. It was pretty close to that, while GDX was, nowhere close to making a 6-week high. So again, it's kind of master the obvious after today's action. But, it is something I point out to subscribers over the weekend. And it'll be interesting to see how far this rally goes, because remember, I did a video right around here in April, before we had this big correction in precious metals, talking about, and you can't see it on this chart, but there was a breadth thrust in GDX in the advanced decline line. And, you get a breadth thrust typically after a correction in a market, or you're at the end of a big decline or a bear market, and then you get a sudden burst of really strong participation as the market recovers. And so when you get that in any market, it tends to tell you that this rebound is going to turn into a bull move and be sustainable. And the last two times we had such a thrust, I think you have to go back to 2019 and then early 2016, and they proved to be a very bullish signal. Now, in 2016, GDX, after the signal, I think it corrected 15 or 17%. So this correction here, I think, was a little bit more than that. So it remains to be seen. I'm going back here and talking about the thrust here, but, who knows? Maybe that signal is still viable and telling us that, GDX and the associated miners in the other indices are going to continue to run higher, and that this is more than a rebound. But that aside, the key point here is you have this strong burst of participation right now, in addition to the positive divergence, and this kind of move so far is telling you that this move in GDX should have some legs. And of course, after today, it's easier to believe that's going to happen. Now, let me just take a look at gold and silver, the daily charts. This is stock charts. I know this is not updated, but the key thing is gold is now, last I checked, it was 1962. So gold is up here looking like it's going to test, call it 1980, that 2000 zone. It's better seen on a weekly chart, which I have coming up. Silver is up above 24 today. 2450 is the next resistance for silver. If you get a weekly close above that, silver's probably going to run to 26. And the gold-silver ratio, again, this is not updated yet, but you have this little trend line here. And again, I'm not a huge fan of trend lines. Typically, when you see lots of charts on Twitter and these other places, people kind of force them onto the chart. Trend line, with a trend line, you really need to see, in my opinion, 4 or 5 touches to the trend line for it to be significant in a real trend line. Because think about it, anything, you can connect any 2 points, that's automatically 2 points. So connecting 3 points is really not that significant. But here you have 1, 2, 3, 4, and even 5. So in a short-term sense, significant. And then you get, last I checked, it was below 81, so we're around 80. So this could be a breakdown in the gold-silver ratio. And, who knows? Maybe that's going to continue in trade into the 70s. I mean, given what I've already said in this video, you probably think, or I would probably think, the balance of probability favors silver outperforming gold, and that ratio coming lower here in the short term. Now, just to wrap things up on gold, if I have time to do the next video, this was a bounce not above. This was a bounce at the 150-day moving average, which is really significant and has happened before major breakouts in gold dating back to the 70s. So, more on that in the next video, but this is the weekly chart. Of course, the week isn't done yet, but, you have this support here at 1900, and, you had the last 2 weeks, 2 bullish hammers. Now today you're getting follow through to the upside, exactly what you want to see. The price action around here on the weekly and monthly charts, it's ugly. A lot of distribution here, but we saw the exact opposite thing. Gold's able to hold 1900, so just below 1963. You have weekly resistance at 2000, also stiffer weekly resistance at 1985. So 1985 to 2000, that's really the key resistance for gold. You can see it on the daily chart, but it's more obvious here on the weekly chart. So if gold can make a weekly close above 2000, it's going to get really, really interesting. And even at this point, to me, it's still really interesting. I've been tweeting and talking about, gold's been holding up really well. We saw that real interest rates at the end of last week just made the highest high since 2009. The Fed has said, we're going to finish hiking, and then there's going to be a really long pause. You think about just since June, 4 hikes have been, Fed funds futures have added 4 more hikes into the market since June. So in the last 6 or 7 weeks or so, and despite all that, you just had this little correction in gold, and now it's like $100 from a new all-time high. So when a market is able to hold up really, really well when there's all this potential bad news, that's telling you something. So this is getting really interesting, and if gold can make a weekly close above 2000 here, it doesn't have to be this week. Even if it's in the next couple months, things could get really, really exciting for precious metals at the end of the summer into the fall. So on that note, I want to thank you for tuning into this video. Let me leave a comment. Let me know what you think. And thanks so much for tuning in. And I'll try and record the next video and see if I can get that out tomorrow. Thanks, guys.